Good morning, ladies and gentlemen. How's everyone doing? Hopefully you're doing swell. Good morning, good morning. Yeah, it's still the morning. So is everyone okay? Is everyone still alive? You might want to check on your friends, check on everyone. They might not be alive. Again, the world is ending. Definitely ending. So yesterday's drop, definitely severe. Fell further than I would have thought. Not that obviously it couldn't do it, but definitely fell a little further than I would expect. It fell to where I thought it could fall to, but went even further than that. So again, it's definitely not every day. A, the market goes into a sell move, and then B, falls like $18 a share in a day. That is the biggest one-day drop, I think. I'm almost positive it's the biggest one-day drop I've ever seen. I didn't even look at the news. The news would probably tell us, but that's the biggest one-day drop I've witnessed. Again, usually like FOMC interest rate stuff, CPI, not even CPI, but just like FOMC stuff. The biggest drop I've ever seen, I think, was $14. I guess it depends on how you determine the drop. But yeah, biggest I've ever seen is like 14. Yesterday, I think it was a total of 18 or so. So just wild. That was way outside of even my expectation. Maybe the fact that the market's been going straight up for like a year straight, maybe that had something to do with it. The fact that the market's also, like $600 these days, the more expensive it gets, then the more dollars it can drop. So that's kind of maybe something to think about for the future. Anyway, so it was just a big drop, pretty crazy drop. We went through a bounce a little bit this morning, then back to a sell. But, as the story goes, the market's in a sell move. It's in a selling operation. So the market is supposed to be a pop to short market right now. We're not necessarily supposed to be long bias trend market right now, which we're not. So yeah, we're just, it's just a bear market for the moment, which started yesterday, obviously with the announcement below the price of 605.12. So once the market broke back below 605.12, the market entered a bear, a 30-minute bear market, or a selling operation, a sell signal. And basically, we're not going to be back to long bias the market. I'm going to take all this stuff off for now. The market's not going to flip back to the long side until we're back on the positive side of trend. Right now, the positive side of trend's all the way up here. So in order for the market to get positive today, it would just have to bounce all the way up straight and then get over that level. So that's just not going to happen. All right. So really what you're going to see is you're going to see the market do its trading how it normally does, and then in the next couple days, this moving average is going to come down. It's going to come down, and then obviously price will meet the moving average, and then you might get a long move, something like that. But for right now, it's just a pop to short market. So you should just be using any sort of pop to short tactics strategy that you have that you're comfortable with, and that's what you should be, as your main deployment right now until the market's back in a long signal, and then you would flip to dip buy metrics and strategy. So for the moment, it's just pop to short, bear market. Still breathing? That's good. That's good. So, yeah, there's always a little bit more to say. We'll get into some stuff, but for the moment, just bear market, pop to short. We'll start here with the SPX. So this was our long destination to start for the morning on SPX. One of these days, this strategy is going to stop working, probably. It did in the past when I showed it a lot, and then it kind of went away, and then it came back a little bit. But anyways, so our long destination was right here this morning in our private group. Pretty much said, watch SPX up to here first to start the day. So it's kind of funny. The market always does whatever it wants. It's never so straightforward, but today was kind of interesting because, you know, we're in a sell signal. It's oversold, so we're bouncing. And then we open with the gap up, right? So today's a situation where I can kind of teach to you guys and talk to you about how the market can be bearish, but you still can see the market kind of move bullish and then deploy a long bias tactic within a bear market on the market. So we had a gap up today, so naturally the first instinct is going to be watching for the SPX to complete the long bias move to the 161. So the 161 target today was $5,937.89. We hit $5,935.56. So we're off by about $2 there on the largest globally traded market in the world. So I guess what I'm getting at is, again, we have a bear move, right? Market's bearish, but since it opened with the gap up, we're going to first look for a long press up for continuation of the gap, even though we know the market's bearish, right? So it's kind of funny because you can come onto the stream and I'd say, hey guys, the market's bearish, but then you're going to watch me deploy something that's a long bias tactic in the immediate. You'd be like, well, why would you be doing that, right? You said it's bearish, but now we're looking bullish. And that's because, again, there's trend, there's Fibonacci tactic. There's all sorts of different approaches that can line up and take precedent at any given time on, for the day. So that was kind of the first destination as far as gap target is concerned on the day. It's always a go-to. So that was that. The SPY. So SPY is a little different, but our pullback targets, actually I'll bring this one up because this one was actually posted onto Twitter today. Pretty much gave the entire internet the game plan today, as per usual, it seems. But yeah, so this comes from Twitter earlier. So you can even see here 1 5-minute counter retrace target. I misspelt, but it's the pre/per market / into market open pullback target, which was down to 589.66, 589.45. All right, so if we look at the market, you guys know what's gonna happen. You guys watch us all day, every day. All right, so we end up hitting both the 1 and the 5-minute retrace target and the counter sell target here. So real quick, we're just gonna kind of add it on the chart. Low, bing, bang, boom. All right, so this is how we're gonna get that first initial pullback target right there. And then I'm gonna go ahead and just delete this off. All right, we're gonna go up to the 1 and the 5 minutes. Sorry, let me get there. All right, so you can see here I'm taking the volume weighted average price of the announcement, like as soon as things kicked off and just slammed down. Again, taking the volume weighted average price on the sell side of that. Where does that volume weighted average price come in? Comes in here, right there, that green line. I'm just going to put a red line there. We're also going to go to the 5-minute here. We're going to take this 5-minute volume weighted average price of the entire drop from yesterday. So I'm tracking the 5-minute volume weighted average price of such move. So again, that's how we come up with, as we showed in that Twitter picture earlier, the 1 and 5-minute counter retrace target. All right, and then the pre-market volume weighted average price 30-minute scale. That's how we came up, as we showed on Twitter, the pre-market pullback target. All right, so you can see in pre-market, and let's go back to Twitter here. So you can see here per market, my per market open pullback target A lot of times that strategy is going to happen in the pre-market and a lot of times into the early morning open, hence why it says per market and market open pullback target. Because again, we're looking at that for more of a pre-market to market open scenario. All right, so you can see where the bullseye is at. And at the time, it was a little lower, but by the time we hit the target, levels had repriced a little bit to the upside. All right, so you can see here, counter 1 minute, 5 minute target. And then also you see up here, this can be a big short entry, FYI. That's more of the larger scale short entry counter target. We didn't get it today, but anyways. So you can see here, it's all mapped off on Twitter well ahead of time, kind of what the thoughts are going to be there. All right, now we move back in. So what happens during the pre-market? The pre-market comes down and hits the target, which would be the pre-market pullback target level right there. All right, that sets up the bounce that then ends up tracking up to the 1 and the 5 minute counter target. Right, so now once we start getting up to here, we know we're getting into resistance, and arguably it's not on the chart, but I'll just make it, and we'll just say it's like right here, right? We know that once we get here, and actually probably a little lower than that, but something like this. We know that once we get here, that's resistance, right? And we know that obviously if we press even through this one and get up here, that's a resistance spot. Because what we're doing is we are taking the sell move, right? So we're taking the sell move down to here, which who knew it was going to go that far? I only projected, I don't know, I think I only projected down to 590s, or I don't know. I'd have to go back and look, but so the market goes down here, right? So that becomes what? That becomes an oversold move, which I'll just put oversold, I guess. We're going to have to do a lot of Control Z. All right, so that's oversold to a bounce back to levels at which we think we can what? Lower high the move. So all we're simply doing is taking a sell leg and then figuring out where the lower highs can be for the move to roll over. That's simply all we're trying to do, right? So when you see the 1 minute and 5 minute counter retrace target, it's simply that. We're taking the move that kickstarted a sell move from yesterday, figuring out where the 1 and 5 minute selling trend would be at, and then that would be one of the fastest catching up time frames, right? And so on and so forth. So really, to make it as simple as possible, it's simply just looking and figuring out where we can lower high the market, right? And then those are going to be targets for the long back up to sell back down, right? Some of the 1 and the 5 minute held today, but you can see in the Twitter post, you know, well ahead of time, right? 1 5 minute, and then we're also looking at this one here. This can be a big short entry, FYI, because all we're doing is just taking the bear market move that started yesterday, extrapolating the bear market trend, and then figuring out the key points where if the bear market and the bear move is still valid, obviously you're going to lower high it, and where would the lower highs be, right? If you're in a bull market, it's going to be what? Higher high, higher low, higher high, higher low. A bear market's going to be swing low to swing high, to swing low, to swing high, right? Or lower low, lower high, lower low, lower high. So when you're in a bear market move, your objective is to figure out the lower low, lower high game. And when you're in a bull market, the objective is to figure out the bull market higher low, higher high game. And then you deploy tools that help you hopefully figure out where the starts of those trends are going to be at. And so even though it says 1 minute counter, retrace target, and fancy words, it's really just where's the market potentially going to lower high from the bear market move that we know just started, right? So, you know, on a day like today, for someone who might be newer to the market, they may come in and go, oh, the market tanked, so it's oversold, so I'm going to buy it up, right? It's got to recover. When the first thought for me is we're in a sell move, it's oversold, we're going to bounce it up as far as we can before we can then try to lower high it, right? Because what we're trying to do is create the trend of the market, the bear market. So that's the objective, right? So we're not going to be looking to buy it and then just rally it up for forever, because we know that that is against trend, and trend is currently down, right? Now, if it was a bull market move, we would say, yeah, maybe we're going to try to buy this oversold dip and then run it up into a new high because we're not in a bear market. Anyways, so that's pretty much it. Just looking for the sell move to counter back up, then, you know, have targetable levels on the way down. So that bullseye was a target for us, and then this here, there's other tactics that we use, but this was also the short target, pretty much down into this area as well. So those are derived from Fibonacci strategies that my business partner Brandon uses, which I won't teach because that's kind of his stuff, and so won't be going over that. But yes, our two sell targets were here, and then obviously like down to here, and our counter long targets were here to here. All right, so we were looking for bounce to resistance or resistance, and then targeting here or here on the roll. So we happen to find resistance in the 1 and the 5 minute, which again, not only was it the 1 and the 5 minute retrace target, it is also what? The let me delete some of this stuff, and I'm going to go over to SPX. So check this out. I don't know if it's going to line up as clean, but because I haven't actually done it on this, but assuming it's going to, just because it's normally how it would work anyways. Yeah, so you can't do pre-market on this. That's okay. So there's no real pre-market here on the SPX, but that's fine. We'll just do it like this. So here's the 5 minute. So again, 5 minute selling trend. So we'll start a box, and then we're going to get down to the 1 minute, and then that's the 1 minute sell trend from the move. So again, just like we were looking at the 1 minute and the 5 minute target level on SPY, we're just moving to SPX, because you can see though the 1 and the 5 minute are that kind of volume counter trend we're looking for, it's also what? The SPX gap target, right? So if we take the gap target, and what do we say we're looking for? We're looking for a move on the SPX up to what? The 161 extension, because we have a gap up. So we have a gap up. Our target is the 161 for the gap extension. Our target for the 1 minute and 5 minute retraces the box. So you can see how that's like multiple strategies lining up for the same thing, a move up into about here, and then we'll see if we get some resistance, right? So it's just kind of going to show that, where we talked about, you could be looking at multiple strategies, right? So our long target to lower high resistance zone based off volume also lines up very close to the 161 gap extension target from the overnight impulse move. So that's two different strategies creating similar price zones. So, that's pretty much just that. It's like stacking peanut butter on top of jelly and then eating it. So that was cool. That worked well today. Yeah. Bitcoin, got this whole thing set up. We'll see. We might have a move on Bitcoin down to 97,000. These are, this was the bounce level. Well, it's not really the bounce level. It's a little different, but we had a bounce on Bitcoin overnight. If you follow my Twitter, pretty much said I'll save the market with my $50 Bitcoin buy and support. And sure enough, here's we move into our support level zone and then up and out. It kind of shook below it a little bit, but again, the entire world was panicking yesterday, so no surprise. So here's your daily support bounce. Back to 4 hour lower high resistance, back down to the 1, the 2 hour, and the 4, well, no, it's the 3 and the 4 hour higher low support. So if for whatever reason Bitcoin does not hold this low and hold the support in this 4 hour to 3 hour higher low destination point, then we'll most likely swoop it out, and then we'll go down to the 97,000. All right, so the same thing here, right? We took Bitcoin last night with a bounce to our 4 hour trend. It's the same exact thing in concept with the SPY, how we took the SPY bearish and then we bounced it back to a 1 and a 5 minute trend and then back down. So it's the same logic, but how we derive the price points are a little bit different from the Bitcoin market to the S&P market. But you can see it's the same thing. Again, it's just a swing down, and then where's the bounce and lower high going to be at? All right, and we don't always get it right, but you know, and then it'd just be the same thing here with Bitcoin or the SPY, right? Taking the bear move down, figuring out the key volume levels, and then where's the lower high right there. So yeah, that's pretty good stuff. Whoa, got a lot going on there. Oh man, why did I draw? I'll get them all off. I gotta stop doing that. I really do. Easy peasy. Who's buying the dip? Michael. Santa rally coming. OPEX pump tomorrow. Loading up on calls, baby. I mean, I absolutely hope you're entirely right, and I hope the market pumps. I'll shift into long bias movement when the market tells me to. So, you know, Mike, it sounds, or Dale, sorry, Dale. Sounds like you're going for an oversold bounce sort of concept trade. So that's awesome. And if you're going to make bank on that, it's going to happen when you get through, well, not entirely true, but you'd have to get through the price of, what is that? You're going to have to get through the price of like 594 for right now. That's ultimately where we're going to look to beat the market back down into a sell move. Only when we get above that will we really start to transition. So in terms of the short-term stuff that I look for, you know, 594, that's another retrace level we're looking for. So what you saw today is you saw us reject the 1 minute. All right. Now, obviously, things trend out, go up. We're going to look for a 594 target. And then we're going to look for resistance at 594 again. And if the sell signal has legitimacy to it, then you're going to see the 594 roast the market back down. If the 594 level is not legitimate, then this is where we can actually start to fire off a short squeeze from everyone that's been short from the sell-off, that's hold too long. So this it's literally this, as the screen shows. It's that or the transition point up. And it sounds kind of dumb saying it, but that's literally how the market works. It's usually just one kind of finite level, which is going to determine the lower high, or it's going to determine the shift and break to the upside. I hope we get a Santa rally. I hope we reset the shorts. We'll see. I have seen similar scenarios like that in the past. But yeah, so, you know, that's pretty much it. We're just... And again, it's probably a little too soon for that. We'll see. Check out that. Yeah. But yeah, our next move up we're going to be looking for is going to be about 594 on the long side. Yeah. I won't, and again, I won't look higher than that. It's just my strategy. It's the way that I view the market. It's the way I see things, and usually it keeps me more on the right side of the trend more oftentimes than not. So I just won't look higher than, even though we know it can obviously go higher than 594. I think of things in activation levels. So right now the maximum I could look up is about 594. Only if we were to get through that would I really start considering that the market can go. Only then would I start announcing higher levels that we could get to. And that's pretty much that. And that's another thing too, is like everyone buying calls and hoping that the market just rips faces off. It just can't. It can rip all the way to 594. Yes, but you have to be mindful because, again, if the market wants to operate a sell move, it's gonna your head will get bashed in right around there. If the bears suck, that's where the price could blow up to. So I always think of, since this is kind of similar to Bitcoin, right? So like, see where the 4-hour resistance trend's at. All right. So 4-hour resistance trend, same logic, right? So we'll say that this is the SPY. Hey guys, the SPY can bounce all the way to 594. 594. But you got to be careful because we could lower high, and that's where you get your head bashed in, right? Only if you get above and stay above will you go and throw the secondary squeeze. All right. So it's the same thing. It's not exactly the same thing. Similar. But you move that back over to SPY, and that's the jam. All right. So we can easily get the market. And I don't want to say we can easily get the market up there. The market works really in two ways. It's either going to go to the target, right, which is in this case 594, or the micro terms play around, do whatever, and then the price ends up catching up too, right? So it'll come in the form of either price going to, maybe some pullbacks in between, and then it decreases down too, right? Never is a market totally straightforward, but it basically means at some point we are looking for this volume weighted average price to collide with this price, and it can either be the market going to it or the price of it coming down to it, right? It's kind of the unknown sometimes. And only if we get above that are we really going to shift our bias to bullish. And when I say shift above, and it's funny because you're hearing me say just a second ago that the market's not bullish until we're over the 50 SMA, which is true. I use the volume weighted average price of the 30-minute to contradict that at times, which basically says it's actually incorrect. I said 594. It's actually up here. There's two ways. It's actually 594 to 595. So unless the market's actually above this, then this is just a 30-minute lower high and beat your face in. So I only look back to the 50 SMA in this situation if we clear the 30-minute and then we squeeze out this market to the 50 SMA. But then the market's still bearish below the 50 SMA. So it's kind of like an intermediate long reset to the 50 SMA tactic. That's so many confusing words for you guys, you're not going to even really... Yeah. So there's bearish below SMA trend, and then there's bearish below volume trend of previous sell leg. That's what that is, all right? We're staying bearish below the volume shelf, and only when the volume shelf breaks out will we then flip in the immediate and see a squeeze that can then just still reset and be bearish below the SMA trend. So it's volume trend and SMA trend in one, and when immediate momentum persists, it's because the volume presses the market down. If we go through bigger bounce long resets, it's because we squeeze out volume trend, right? So you can still be bearish even if you squeeze the volume trend out, and that's because the SMA trend is bearish, right? But you can be bullish below the bearish SMA trend when you're squeezing out the volume trend, right? So it's kind of a squeeze trigger point in a downtrend. I just can never. I hope that's clear. I hope that makes sense. But that's why you can always kind of see that I have like sometimes it can kind of see like the analysis that I give is conflicting at times, but it's all really just, you know, a couple strategies mixed into one, and how you would operate between the two and when you operate between the two. Yo, Pete, what up? Well, I'm Connor, but you know, hopefully we get a Santa rally. I don't, you know, I'm always kind of indifferent. I mean, I always would like a rally because obviously my long-term portfolios will always do better in that regard. But as far as the intra, short-term, up-down, I'm always indifferent. Doesn't really matter. The market's just going to flip back and forth from a positive to negative trend, and again, you just do your best to stick in the right direction of that trend, and that's all. You want to eat some shorts for lunch? I mean, yeah, that's why the thumbnail of my video is a bear munching on the bull, because, you know, that's objectively the market's objective right now, is for the bear to munch on the bull. And we ate him yesterday. We've eaten him so far today. And we will continue to eat the bull as long as there's no reason to shift to the positive, right? So we're going to be munching on the bulls here for a little snacker Magooster McGee. Again, as long as the trend stays negative, right? When the trend goes back to positive, then, maybe we'll throw out a thumbnail where the bulls are munching on the bears. Thanks, Wilson. I appreciate that, brother. Really appreciate that. So, yeah, I mean, I wish we had more to say, but, when you, yeah. Actually, I do think the PGA Tour is on today, so if that's on, I'm going to pop that on in the background. We're just going to be chilling. Again, I ain't got nothing to do. My dog is sleeping in my bed right now. He's confiscated the king-size bed. And I already made chili last night, so I got a batch of food already made for today, so I don't really need to cook up anything. Usually my wife works pretty late as a psychologist. So I tend to make dinner quite frequently. I do enjoy cooking though. That's another thing. So we've already made some good there. Thought I was already logged into Peacock. Where's the login button? It's like literally on the homepage of Peacock, and it's like upgrade now. It's like, nah, how about I just provide me a login option? That is, upgrade. I see. You were trying to get me to pay more money. Nah, no thanks. Oh, it's probably, I bet it's not even on Peacock today, but it's on YouTube TV. Psychologist just speaking of facts. Chupapi, Supreme, Connor, Magoo. I love it. Chupapi Mungueño. Can I do Bitcoin? Yeah. Yeah, we'll start. Yeah, I'll do Bitcoin here in a second. Let me log into my YouTube TV. I'm trying to see if the PGA Tour is on yet. It might be too early for this. I think there's something. I think it's at Kapalua. Maybe it's too soon. I think they started Kapalua right in Hawaii right now. 1 second. I'm trying to get some golf going into the background here. Maybe they don't. I don't know. What is it? No, I have it wrong. Yeah, there's nothing here. That's on January 2nd. Alrighty then. Sounds good. Guess we're not doing any of that. Alright, yeah, we'll pop into Bitcoin here for a cool little second or two. Alright, over to Bitcoin, starting with Twitter. So this was last night. Yeah. So we'll go here to last night. So 19 hours ago, Bitcoin just hit our daily pullback target. Wouldn't mind a bounce here off first tag rules. So I was a little early on that. I'm usually a little early on that. I'm usually pretty early on, I would say, a lot of levels all the time, because as soon as it gets to a level, I just announce it, because obviously, that's how you make a nice little before and after, showing people before anything really happens. So, yesterday when the entire world's panicking and everyone's, dying, market here again, first daily support tag 1,325 to 99,588, which it ends up going below that by a little bit. So 99588. So that's what we're talking about. This is a daily support target. I'll take my $50 and save the entire market real quick. Don't worry. So now we transition into Bitcoin. We'll go over what we say 995289958899588. So that's like right here, 99588. Right about there. That's good enough. So this was our, I'm going to point to it. No, let's just not do that because then it's always just annoying. So right here, I'll just type in daily support VWAP zone. All right, so that's where I was looking for support last night, pretty much into this area, which ended up creeping below and really just went down to another daily VWAP that I could have used, but you know. So this really was, so if I were to map this off, it would really be like this fully. So there is 3 daily VWAPs that arguably I would use to use. So this would be the full daily VWAP zone I could have used from top to bottom, being 1,300 to as low as 98,700, and then the middle VWAP zone being there at 99,000. Anyways, so this is the daily VWAP. So I start talking about it when we first come in. So right there, that's when I talk about it, right? So we're coming into the zone. It sells all the way arguably to the bottom of the zone, and then there's your bounce overnight up to a 4-hour resistance here, okay? And then we'd really just roll the market over back to a 4-hour and 3-hour support. Damn it, I'm doing the drawing thing again. I hate this. But what else am I going to do, right? So as far as Bitcoin's concerned, right, the whole world ended yesterday. I had to step in. I had to save it. So we came in with the daily support zone. We saved the Bitcoin market real quick, which really just resulted in a long to lower high on the shorter terms. So we used a longer term support to rally it back to a shorter term resistance, which then holds resistance down to here, which is a shorter term higher low support. And if the shorter term structure fails, then we're just going to sell off down into 97,000. Just like that. If we, yeah. Yep. And the reason we're kind of looking for maybe some 4-hour resistance here is because if you look at, say, the daily chart, there's not enough daily chart development for us to try to work resistance off of a daily, level. It just doesn't really make sense. There's not enough development there. So whereas if we look back here, so if we were to take the chart and we look left, there's a lot of daily chart development that's took place. So that can help us with future daily development, which is why we use the daily support VWAP down there. But if we look back to here on this high, there's only one daily candle down. That's it. So if there's only one daily candle down, there's not really a lot of daily structure there to work with. So then we'd have to go with something lower than a daily chart structure. So then we'll start backtracking the time, and hence we would go to a 4-hour, and you can see we had the 4-hour lower high. Here's your 4-hour lower high. So we basically took, again, that daily VWAP, bounced the market up to a 4-hour level, and then lower high'd it. And did the market have to do that? No. Could the market have just kept going up? Sure. Market can always do whatever it wants. I didn't assume we would just keep going up there. And the reason being is because, again, if you look at the daily chart, that's a pretty big beat red candle. I mean, whether you're looking at the 4-hour, I mean, that's a pretty significant rollover, right? So much so that I would be willing to first look for, the market to bounce and try to lower high something, at least attempt, right? So I would be more on the side of the market at least attempting a lower high after such a big knee-jerk down, as opposed to just bounce and just go straight up without any resistance, right? And it's actually kind of the same logic here, right? So like this was a big knife move down. You can see this one pretty much a straight V reversed up, had like one red candle in there and then some here. So there's situations always where it can just kind of do what it wants, right? It doesn't have to maybe hold a lower high or something, but I don't know, just with the FOMC and Jay Powell, McDaddy just destroying the entire market and ending the world, along with just how far Bitcoin's gone up in the short term and really hasn't had like any real aggressive pullbacks or anything. It just kind of seemed like, this would be a time where we would try to put in a little bit of a lower high on the micro scale, something like that. That being said, as far as Bitcoin goes, it's still the same thing. We're looking bullish until the end of 2025, hopefully. And I hate saying it like that, but again, we're bullish until March of 2025 to October of 2025. That's our timeline. We're staying more long-sided logic until March to October of 2025 on Bitcoin. After which point, we'll see what the chart looks like. We'll see what the market's doing and so on and so forth. As far as that goes, I can't really say it's smart to be accumulating Bitcoin positions right now. It doesn't really make sense. If you want to buy some here and there, sure. If you want to dollar cost average stuff, sure. I even literally bought that dip. Literally, I did buy this dip yesterday. As we came into the daily view app, I bought. Did I know that it was gonna bounce? Probably. Did I know that it would bounce and then, go up for forever? No. Will I be mad that I bought here and it bounces and doesn't go up for forever? No. Because again, we're still projecting, at least I am, March of 2025 to October of 2025, that we can still have a bull market move. So even though we're coming down now, right, and though it may not pick up here and go for forever, as the market comes down, I'm willing to add money even into some of those daily levels, because those are big levels. So if we are going to continue for majority of 2025, let's say we are going to continue up for majority of 2025, then any dip that comes down into major support for me would be buyable. Even if it may not be the absolute low, this one, the next big level down, I would buy, and maybe that will be the absolute low. But the concept being is, if I'm going to buy a dip, I want to buy it at a specific point that could create a low, right? So you might be wrong in picking those lows exactly for more of a long-term push, but as a result to short-term trading stuff, I mean, there was no better buy point yesterday in this sell-off than that daily view app zone. It had the biggest rally off that low. There was some bounces here, but again, ultimately into that daily zone, that was your best opportunity for a long reversal and trading concept. So add some of that short-term bottom picking type analysis mixed in with long-term projections, and when you buy a dip, you're buying into some of these lower risk levels, as opposed to, buying into the 4-hour high and then getting dumped on, right? At least I got to sit all last night knowing my trade was doing okay. So anyways, that's the way I see it. We have until March 2025 which isn't too far from now, to end of 2025 pretty much. And so as long as the market just doesn't go into a bear market, any of these dips that I buy that are on sale into daily or weekly view app supports, or any support for that matter that I think is somewhat worthy, would essentially be completely fine. Now obviously if my forecast of the bigger push is wrong, then of course I just averaged into a high that sucks. So be it. Just is what it is. You'll never do anything if you don't do something, right? So, and that's the other thing too is, yeah, I mean, I think it's funny too, even saying that, because, it's funny looking at that little dip buy, and, even though when we go back on this chart, it's there. I mean, I'm not going to sit here and, holy grail myself, but again, this whole entire thing, we said buy Bitcoin. We're going up. Here's the breakout. We're going to go here. Then we got to here and we said, all right, wait. And the coolest part was pretty much we kept everyone in check this whole time. This whole consolidation, we said, just wait. Sideways to down until it's ready to break out. And then once this week happened, we said, this is your last opportunity before this thing rips faces, and then slam, right? So, we're pretty much, again, we're closer to the end than we are the beginning. I just think there is still time left on it. So I'm just even taking in only little dip buys when it comes down into what I think are somewhat valid supports on the way up. And that's pretty much it. And then again, like we said before, the next real big accumulation spot, the next real big accumulation spot for Bitcoin is going to be probably here. It's anywhere from here to here, 40 to 50 right there. So basically when this market eventually stops, so we'll say it's again into March, that's April, well, March, April, let's see, March, April, October of next year, July, August, September, October. So we'll say it's into October. So some by here then could see something like that. Someone snapshot that and, you know, put it in your office somewhere. And if that ends up happening, you know, we can post it up, you know, in 2027. Let's see. Any specific reason to why March? Yeah, so it's just basic. I'm honestly just looking at the chart from what's happened and just basing a timeline into the future. So this is the saying you always hear me say on this stream. If the Bitcoin cycles repeat with some positive correlation to the past, rhyme, very similar. And when I say similar, I mean the pattern can look way completely different, but in like the big picture, if they're going to repeat similar to the past, then yeah, I mean, come March and October of 20, and when I say March to October 2025, it's based off the last cycle. So the last cycle was this. So this was the topping cycle on Bitcoin last time, which was a course of how many months? So this topped in April here and then double topped in November. So you had 1, 2, 3, 4, 5, 6 months that created a top, right? So I'm not going to tell you guys, hey, we're for sure going until October of 2025, knowing that the last cycle started peaking, which would be this time around in March, right? So when I say March, it's because I'm looking at the past cycle and knowing that we topped here. And then when I say October, it's because I know that the last cycle we double topped and then even pressed into here before the real bear market started, right? So that's been my projection. This pretty much most of this run is that we have until that timeline. So it's either the market goes to our price targets on the upside, or we just run too far into the timeline of when the bear market can start, and then the bear market just takes over precedent versus running to euphoric targets. So yeah. You're using Nvidia as an indicator for overall market. Nvidia goes yesterday's high is 136, puts are cooked. Also, we covered Nvidia yesterday a little bit. We talked about Nvidia and talked about how I was looking at a long play with Nvidia because it was getting a little bullish, which basically was, hey guys, Nvidia's getting a little bit of positive today, but again, it doesn't really matter because all that really matters is when Jay Powell comes out. If it's good, then it's going to pump. If it's bad, it's going to dump, right? It's pretty straightforward there. So just an FYI. Which, anyways. So, but yeah, you use Nvidia. Yeah, I mean, Nvidia is a good stock to use for some direction on the market. Again, really, it all just comes down to looking at your biggest market cap players. If those perform well, generally the market performs well. If they perform poorly, generally the market performs poorly. And of those big top market cap stocks, there can be the shiny golden boy child of them all, and that can rotate. Currently, it's been Nvidia. It's also kind of Tesla right now, so on and so forth. So the market may transition between Apple's, Microsoft, Nvidia, Tesla, any of these really big market cap stocks that are kind of at the forefront of hype and media and so on and so forth. So the market will basically do everything that those do. And then of those few, there will be maybe one or two where the spotlight is specifically shining at this moment in time. And you can figure out where the spotlight is shining just by taking a step back, touching some grass, and using your brain, right? What stock's been running the most? Nvidia. What stock most recently has been running like crazy? Tesla, so on and so forth, right? So you can just kind of get an idea for where the golden child's at just based off the market sentiment. What's the media talking about? What has been pumping the most? Where is the hype at? And you can generally get an idea for that just, you know, of the top couple because there's only so many to look at. So there's usually a golden boy pick, and then yeah, just the major market cap stocks. That's why we look at the market internals of all the stocks. We do a combined ticker of Apple, Microsoft, Nvidia, Tesla, so on and so forth, and that pretty much most of the time tells us how the market's going to do and what it's doing and so on and so forth, which I could cover in just a little bit too. Crazy B, appreciate that, Andrea. So you say until you're over the 50 SMA on the 30-minute, you lean bearish. Are there signs you watch for looking for bottoming in the market? Yeah. So I mean, when we say bottoming in the market, yeah, I mean, again, when it comes to bottoming in the market or topping in the market, there's only a handful of things you can use, and they all do the same thing. They just might say things a little differently. For topping of markets, you can look at momentum, right? Because momentum can give you overbought, oversold. So you have to separate indicators and tools and strategy and know what they're supposed to do or the things that they're supposed to tell you. Okay. RSI, you know, MACD, stochastics, momentum indicators can give you an idea for when things are oversold based off momentum metrics, right? So you could use those. Okay. Secondly, you can, like one way you can look at volume shelf levels. I look for support levels, just like Bitcoin, right? So we use the daily chart here on Bitcoin for a bounce, right? So I used daily volume weighted average prices to figure out where this would probably have a good chance of bouncing. So we're just going to do this. We're going to give this one out. Again, one day I'll probably stop showing all this to ensure that it keeps working. So one day, again, you may just never see me show you this stuff, and I'm just going to call prices, and you know, that's pretty much it. But this is how we derive the daily bounce, or the VWAP and the support zone, and of that there would also be one in here. So we'll do like that. That looks kind of crappy. Let's do it like this. So this would be a way that we figure out, you know, potential supports on the way down. So yesterday, when the entire world was panicking, we were like, well, I mean, yes, we are selling and it is bearish, but we are coming into the daily VWAP support zone, which is this whole entire thing. So I would not be looking to be like selling the market through this. I'd be looking to counter the market first here. As far as a short-term trade idea goes, right, as far as that's concerned. So this would be me having a support zone picked out, right? So I'm already looking for a bounce here. Then you could stack on top of that maybe RSI for momentum, right? You could stack on top of that a MACD if you like, to give you maybe confirmation of when this is maybe more ready. Maybe this thing came with an RSI divergence, right? So now you have a divergence in a level where you already have been looking for support. If you're using just one thing, it can be a little bit more challenging, right? If you were just looking at RSI and you're like, well, I see that the market's going down and, you know, the RSI is going up, so there's a divergence there, right? Yeah, you might be like, well, I see the divergence. You know, I know that we're diverging, so that means the market could go against me. It could go the other way. But even though it's diverging, where are your pinpoint levels? So that would be a pinpoint level of support. This, for me, would be a pinpoint level of support, and this would be a pinpoint level of support. And look at every one, right? Pretty much bounce, shakes through a little bit, then bounce. So the levels that I'm picking aren't random, right? So I might be seeing a RSI divergence, and of that divergence, here's 0.1, 0.2, 0.3. So buy 0.1, buy 0.2, buy 0.3. Rally up. And then you could stack RSI, you could stack Divergence or MACD on top of that, so on and so forth, right? So that's one way of doing it. So it's always it's always going to be helpful if you have a way of first determining a point of value. And then once you reach the decided point of value, what other tools will tell me it's correct that my brain can't know on its own? Like, your brain cannot calculate momentum, but an RSI can, literally. And MACD can literally help calculate momentum. There's no way for you to do it in your brain. You might be able to visualize momentum, but you can't actually run the calculation in your head. You may need some other tool to help you do that. And that would be an RSI, that would be MACD, that could be stochastics. Literally any moment. Those are just the main ones that I would think of and arguably look at. And first go to, because most popular, also some of the most easy to kind of use. But any momentum indicator, you could use there. So yeah, today's a hangover from yesterday's hurt flash. SPY hurt today. Didn't move fast enough for me to 0 DTE. I got you there, yeah. It can be tough, yeah. If things aren't moving, then 0 DTE can definitely be tough. Market selling, not NC. Market selling not because of the cut, but rather Powell entertaining the sanction questions like as if he controls policy. Yeah, for sure. I mean, all of you guys should hit the like button. I really don't know if it's going to do anything for our YouTube stream, but maybe it does. So yeah, if you guys want to go ahead, take your forehead, smash your keyboard, don't hurt yourself. I didn't watch the Powell meeting yesterday. I didn't watch any of that. But I just simply looked at the chart and just kind of figured out where we should go to, hopefully, which I was still wrong about, right? I was right and wrong. I was like, yeah, we're going to go down to here. But I don't think the market's going to drop more than, $10, $12, because it normally doesn't. And then it drops all the way $18 yesterday, right? So it's like, you can still be right and wrong in your thinking. But yeah, I didn't watch the announcement yesterday. I didn't watch any of it. I just simply looked at, was the market bearish or was it bullish? And if it's bearish, deploy bearish tactics, and then what levels it should arguably move to. And beholden it did. Thank you, brother. Appreciate it. Thanks for doing the streams. Knowing you're banned from growing and reaching. Yeah, it's kind of wild. Yeah. Again, do realize that, I always say to myself, never mind. But yeah, so yeah, it's a challenge. I mean, I don't really think that much things will change there. I think, again, it's just kind of the consistent audience base that, you guys always kind of come show up and hang out, which is totally fun. I enjoy sitting here and looking at this stuff and talking. But yeah, I mean, they generally, YouTube doesn't send your new aspiring trader here. That's for sure. That's kind of the last place they send. They're like, yeah, if you've been in the market for, 10 years, you can come look at him. But if you're just starting, no. We want to get you sucked into my broker, my penny stock, my prop firm, let you go through the circus first. If you come out on the other end, then we'll send you over there. But yeah, this is not your not your first stop typically. Actually, yeah, I'll share this to I'm gonna share this to Twitter as well. Oh, I've been copying my link to share to X or Twitter, even though I could just sometimes you realize that you are just kind of an idiot at times. One second, phone call coming. I'm going to put you guys on that cute little waiting screen. Be back soon. Do you do you do you want me to sell you health insurance? I can do that. But I want to make sure you're enrolled in your health plan. Let me tell you about my boiler room trading health insurance plan. It's phenomenal. I can get you set up right now. I see this isn't going to work. No, I was purposely unmuted myself there just so you guys could hear the comical little chat between the health insurance person that just always wants to call me from a new phone number every other day. She didn't want the BRT health insurance. She was not about that life, unfortunately. So, yeah. So we're just gonna kind of sit here and just hang out as we normally do. Not too much to cover there. So yeah, we've gone over the Bitcoin thing. That's cool. Let's get back over to the market. Market's just kind of staying down. Nothing crazy. It's doing everything it should be doing. You know, again, it's in a bear market. We're going, you know, it's just downsided. Yeah, let me pull up something else here for you guys so I'm not just kind of chatting for no reason. Yeah, I was just looking out for. I'm like, are you sure you don't need the boiler room trading health insurance plan? Comes at a great deal. All right, let me bring back. Wait, is this? Am I not focused on the chart? No, it should be, or maybe not. Weird. Hopefully, you guys can see TradingView. Looks like this. There it goes. Yeah. So yeah, again, market is just, it's just in a bear move. Nothing, you track one. Hold on. I just loaded up a screen and it took away the YouTube chat. If you track the 1 minute anchors from the 50 SMA break on the ES, they catch the top this morning perfectly. Yeah, a lot of times it'll work on ES too. I pretty much used the 1 and the 5 minute trend on the SP, the S&P and the SPX, hence why you saw it pretty much work on the ES. Again, we use a lot more strategy on SPY and ES and QQQ, and then just kind of relate that to ES or wait, yeah. You know what I'm saying. Wish there was more to say. I really do. I really do. I guess we can talk about this VIX here for a second because this is kind of cool. Look at how big that VIX run was. So this is so what we saw yesterday too is like, you know, VIX ran up to where +3 standard deviation. Normally doesn't go there. It got a little overbought. But if we look at the trend here on Thinkorswim, pretty much everything's in an uptrend, right? So this is another thing we always preach is when the volatility index see, you can even see that the volatility index was in an uptrend before the FOMC stuff, and obviously, right? So if you see right here, I'll zoom in some. So back here, the volatility index went into an uptrend. So the market, it's kind of like, hey, why is volatility going up? Okay. And then obviously volatility went into an uptrend here. So we're like, all right, market's arguably getting volatile. So, you know, leading into CPI and FOMC and things like that, you will notice that the volatility increases because duh, right? And then something like this, you see the volatility never broke down. So FOMC comes out, volatility stays up. So just ultimately, we're just in an uptrend on volatility back from on Monday, right? So on Monday, was that last week Monday or this week Monday? Yeah. This week Monday, we went into an uptrend on volatility. So you should already be thinking, hey, the volatility market is implying something can be brewing. Hence, what's brewing? The FOMC announcement. Is what's brewing actually bearish or bullish? We'll find out. So the volatility just increases normally because obviously, duh, Jay Powell, daddy of the market, can come out and just destroy everything. So volatility is going to go up. And that's the insurance, right? That's the insurance of the market. The market's taking out insurance. Things could get volatile. And then Jay Powell, the dad of the market, just destroys us. And we go up, right? So the volatility market's been signaling that volatility was on the rise and the horizon before Jay Powell and the FOMC stuff, right? Obviously. And then as it sits right now, I mean, everything's uptrending on that. So we used just the other day the weekly 50 SMA. That's usually kind of a big point. You can kind of see here every time we get over the weekly 50 SMA, the market kind of on the VIX starts to really pick up. So we used the other day, just yesterday and the day before, the 50 SMA on the weekly and said, hey guys, check this out. We're breaking over the weekly 50 SMA. When you break over the weekly 50 SMA, which is, it's actually changed a little bit, but when you break over the weekly 50 SMA, that's where volatility a lot of times really picks up. So we break out the weekly level there, and the only moving average left in sequence to track down was the daily. So you can see the daily volume weighted average price, or daily 50 SMA was here at the price of, wait, yesterday was 18 something, or was it 1680? Maybe that was it. But anyways, it's about 1680 right there. All right. So once we broke out the weekly 50 SMA, and this was all on live stream yesterday, we even said, hey guys, we're breaking out, market's going to go up all the way to this level, then you're going to have a little resistance, blah, blah, blah. And then obviously the market just got destroyed and we kept going. So yesterday at this time, wherever this is, yesterday here, the weekly broke out. But that was also off the back of Jay Powell and all this stuff. So Jay Powell comes out, destroys the market. Weekly 50 SMA breaks out. So now the weekly VIX is uptrending along with the short term. And then it goes up to the next, SMA in sequence, which is the daily. And then the daily breaks out. Now every single VIX time frame is uptrending. You're not below a weekly, you're not below a daily, everything. 30-minute, 5, 1, daily, weekly, everything is uptrending. All right? Jay Powell destroys the market, VIX goes crazy. All right? Sweet. Now, you can already see we're setting up scenarios for a market bounce at some point. And when I say that, it really just means if we go back to this day, you will see right here, there's a gap in the VIX chart. See that? Gap. Okay? So let's take that out and run it to the future. Gap. Gap. So we're going to be looking to bring the VIX down. Obviously, right? Things go up and things come down, right? So we've just left a little breadcrumb, a little cookie trail on the VIX back down to $17.62. Now, when the market is ready for weakness and when the market ends up going down on the VIX, when the SPY bounces and the VIX gets crushed, then we will go and we will get that gap fill. But it's just more or less a reminder and a little breadcrumb trail to say, hey guys, by the way, just so you know, we left a gap there, which basically means it's a telltale sign that we're going to go back down there at some point in the future when the market is ready. Well, when's the market ready? Well, the market's usually ready to go down when the VIX enters a downtrend and or, in this case, the market enters an uptrend. That's normally when you'd see the VIX and the volatility decrease, when things aren't going down anymore, right? So you're going to look at trend to determine when things go from bullish to bearish, and then that becomes more of a targetable level at this point. We did talk about it filling yesterday, but clearly that didn't work. So a lot of times these can fill right away, sometimes not. But anyways, and then even on this day, guess what? What do we leave? Oh, there's another VIX gap right there. So even on today, we left a little breadcrumb trail that says, hey guys, we got another gap that we're going to come down and fill. So we're using these levels on the VIX as reminders and then future magnet targets down, right? So when things roll over and get bearish, we'll go, hey, we're going to go get that. We're going to go get that. So when the VIX starts to target those levels, it's going to go down. So then we'll use that to bounce the SPY, when those may be, right? Yeah, so I wonder why they don't put this stream on the front page of YouTube anymore. We're doing pretty good. We're doing good. You guys should, I mean, you could probably see that. I don't know, let's see. We're doing well. We got the negative 408 subbies this month. Again, we're moving in the right direction. If we keep this up, we should dip in that 164,000. Probably, I mean, definitely by the end of the month. I mean, again, that would make sense. So we should be doing all right there. We're doing good. No complaints. I just think it's just kind of funny. When I spend more, it's funny how it works, the algorithm. When I spend more time streaming and on longer, they remove followers faster. If I do nothing and post nothing, they'll just slowly remove them. But if I'm active, they actually remove more. So it's just a funny game me and the algorithm play. Yeah, so like by me actually sitting here and spending time streaming, they're like, nah, we're going to take 50 more today. So I just find it funny. And it's not even it really matters at this point anymore. I kind of giggle at the concept of like, well, wouldn't it go the opposite if you spend more time? But no, it actually works opposite now. So it's kind of good little tickle. Because my title's promoting fear. I thought fear is what sells. That's what sells. So yeah, hopefully you guys had a good day. Hopefully everything worked okay for you guys. Anyways, let's pull this back, go back into the chart. Oh my gosh, it's going down. Who would have thought? I mean, seriously, who would have thought? Thought it was supposed to go up. I thought we were in a bull market. What the heck is going on? We could probably use one of those Jim Cramer tweets right about now, right? That says that the market's bearish. Because then it would probably go up. He did actually say, I think someone said unless it was one of those false, I'm not even going to say, so many people make false tweets about Jim Cramer these days and try to pass it off as legitimate. I watched him. Someone on Twitter, some major account, makes some posts about Jim saying something about this stock. So then, that gets sent out to like 300, 400,000 people. And I'm like, is this even real? I go to Jim Cramer's Twitter account, scroll. I take the date of the tweet that was on the one guy's tweet that went out to 400,000 people, then went to Jim Cramer's account to the same date, no tweet exists. It's like, wow. Perfect example of how fast misinformation can spread on the internet. And it happens in all sorts of areas. Politics, finance, health, really whatever gets the views, they don't care. And it's funny, I was actually messaging with Grok, the AI thing, yesterday. I'm like, basically just like went on to say, it's like, so as long as the content is engaging and entertaining, you really don't care what the material is. And it's like, basically, yeah, he's like, that's what advertisers pay for. So X is going to naturally, promote whatever has the highest engagement rate. I'm like, even if it's wrong. I'm like, nice. Oh, no, that's never going to change. Even with Twitter and Elon Musk, they still have shadow banning stuff that goes on there. So I don't really foresee any of that ever changing. I mean, I've been on the back end of it for 4 years now straight, multiple houses. Again, I don't foresee any of that really changing. If anything, it only just gets worse. Yeah, let's go check on our friend Bitcoin. Oh my goodness, is Bitcoin going down again? What is happening, guys? What's going on there? I don't even know. I have no idea. What's the jam? What's the tickle me sideways going on here? I don't know. I'm feeling like it might need a bullseye. Could be a little too soon. But if so, we're gonna be having ourselves a little 97K party. Maybe we'll put the guy in the. Just kind of. Why does it seem like puts are always more expensive? So that's actually a really good question. It's probably one of the better questions I've received in a long time now that I think about it. No offense to anybody else, but it's a perfect example of what's going on. So you're probably looking at puts right now, or you've looked at them today and you're like, damn, these are expensive. So number one, the market is in a sell signal. So the market knows we're in a bear market, right? So it knows that people want to bet bearish. So the market is going to charge you a premium. Not to mention, look at the volatility index. The volatility index is blowing through the roof. So the implied volatility is significantly high. Therefore, the implied volatility of your options has increased dramatically, which then gets baked into the cost of the option itself. So it's the same way as when there's a hurricane and then there's a gas shortage, right? Or there's a water shortage and people price gouge, right? It's the same scenario. It's a market knowing what people want and upcharging because they can. So, hence the story goes, the market always knows. The market always knows, right? If the market enters a selling bear market, generally the market does what? It goes down. Number two, volatility index goes up. Number three, implied volatility goes up. People want to bet bearish, options, puts cost more. If you buy the puts before a sell signal occurs, then volatility has yet not spiked. Therefore, if you pick a top, then the market goes into a sell signal, Market goes down, volatility goes up, implied volatility goes up, your option price booms. So to get really, I don't want to say to get really, really big gains, but to get the premium, the implied volatility, the juice portion profit of an option, you have to be in before volatility spikes. So there's kind of a give and a take there, which is if you're not in a sell signal and you bet bearish, then you have to have predicted the top, or else you don't get the big payday, because then the market just keep going long. Also, if you wait to go into a sell signal, a lot of times volatility will be spiking in that event, so you're starting to pay a higher premium to get in on the put side. Yes, this in itself is not the greatest example because it's an FOMC thing. The market tanks beyond belief. The volatility index went absolutely nuts beyond belief. So it's kind of a situation that's not the norm, but a situation that makes it so obvious, though, right? For teaching, that is, right? The volatility index blew up so much, the move went to the downside so significantly that you yourself you're seeing it, you're like, damn, these puts are expensive. You're literally seeing it perfectly because of how volatile the event was. If it wasn't so volatile, the puts wouldn't be that expensive, and then you may not be asking the question, like, why are puts always seem more, like, why are they? Because they actually wouldn't be that. They wouldn't be so inflated at that point that you might think they're, a relatively decent deal. Oh, Charles Jobbers. Hey, brother. Happy holiday to you. Yeah, it's been a while. I don't know why. YouTube wouldn't let me stream for years, and all of a sudden this past, couple months, they've let me stream. So, I don't know. Someone who controls things said I'm allowed to stream again, so now here I am. So good to see you. Good to see you, brother. Happy you popped in for a second. Let's see. I'm actually kind of curious. Let's use Chat GPT to figure this out. Let's see. If Bitcoin drops to the price of 97,000, how much market cap decrease will that be today? That doesn't seem right, but maybe. It says it only result in $73 billion decrease, so, but I always see those posts are like 1.3 trillion wiped out Bitcoin today, but I guess arguably, ChatGPT says, well, about a 73 billion. Well, I guess it depends on where we open for the day. So if we look at today, I don't know. It depends on how it's calculating. I should probably say from the high here. So from 102,000 to 742. How about the decrease from 102,000 761 to 97,000? Come on. You can go faster than that. So that would be $114 billion decrease is what it's saying. Wait a second. Now I'm thinking that even more misinformation's been spread on the internet. Let me check something, guys. I'm just wondering if I just came to the realization that even these posts that people are sharing are entirely wrong. Sorry, give me a second. Liquidated. No, I think those are about right. Okay. One. I don't know about that. How much is that? Let's see. Sorry, I'm just learning and doing some stuff on my own here. Oris, I don't know enough about that to really give you information there. I mean, again, I never traded like VIX options myself, things like that. But it's the same as everything. If it's going up, long. If it's going down, sell. And then just wrap strategies around that. So objectively, you got to know the trend and then be on the right side of the trend. That's literally the story of every single market. And we've already gone over that, you know. So again, when did the volatility index go into an uptrend? Go to your chart, go to your 30-minute, wherever that might be, is right here. And when did the volatility index enter an uptrend? Had an uptrend start here, and it had an uptrend start here. Arguably tried to start one there, It chopped the 50 SMA for a couple days too, so it's kind of confusing, but there you go, right? Or if we even go back a little bit further in time. All right, so right here, right, watch this. So what happened, right? So market here, VIX goes down. You would be on the sell side. So you're either getting puts, selling calls, et cetera, et cetera, et cetera. And you make money on the downside, right? Volatility index right here does what? It enters an uptrend. So as volatility is increasing, you'd be long. It's just understanding the up-down side swing of trend. Short the SPY at the 200 rejection. I'm not sure. That's usually not in my wheelhouse of tools that I use for shorting metrics. If that's something you're comfortable with, then I would say go for it. But it's not. It's not something I typically kind of think of. I'm not saying it doesn't have value, but for me, it's not something that I'm typically thinking of. Our short for the market today was basically the high of day. Only because that was our long target destination for our SPX gap and our 1 and our 5-minute volume reset. So our objective for being bearish was up here on the day. Whoa, what is da? What is da? So, yeah, I mean, we're coming down to whatever. I'm not even going to say it. Not even going to say it. Just going to hang out. Wee. I know they got a golfer in here. There he is. Whee. Yeah, so again, objectively, this is where we're looking for 97,000, and this is going to come in the result of flushing this move, this low. We have to flush this low to get that move. We've been on the sell side since the 4-hour resistance here, so remember that this target down here, we've been mentioning even in our private stream since the market was up here. Okay, so just because you guys are on stream and you're here now, and again, this is all kind of started all the way back up here, right? So right now, it's a matter of taking out this low and not finding support there, and then we'll get success, right? So if we kind of measure the whole move down, let's see. So the whole way down would be a decrease of 5.5%. Right now, we're at a decrease of 3.9%. So we've done about 70% of that bearish swing from the 4-hour down to our, call it, potential daily target. Right? So it's not like we're at the start point of this sell swing move, at least the way I see it. We're coming into that last bit of it, and there's no guarantee we get this because, again, we still have to get through, again, that low price action support. But it's kind of, we know that if arguably it fails and it flushes out, we should get down to about 97,000. So a lot of times this is where the double bottom or like the previous support traders will come in, right? Because they see, oh, like this is a good low, so we've come all the way back down here, so bounce, right? And a lot of times they will bounce it, right? But I'm not really crazy about it because I know that when we come into the daily VWAP, this is a lot of time, the first attempt is a lot of times great support. If it's so good, a lot of times you won't come back to it. You'd end up holding a higher low, right? So the fact that we've already hit support, bounced, then came all the way back down, my thoughts are it gets a little weaker here, but again, it's still a nice stretch down. You're probably gonna have to wait for maybe some bouncing action. We'll see. If the market plays nice, it just straight goes to here. If not, again, we got this has already been used as support once. This would be secondary support. But anyway, so yeah, that's gonna be our final destination of this leg by breaking that support. And in the short term, again, it's just, again, if we bounce, it's just going to backtrack micro levels is what it does. So, even here, it would just basically be something like that. That's the 5 minute, the 15. Yeah, so, I mean, yeah, it's just about the 5 and the 15. Let's see, the 1, the 1, the 5. 30, yeah. Like right now, if this wanted to bounce, the only thing that would make sense to go back up to would be like the 5 minute or the 15 minute. Because there's really not a whole lot of structure developed on the other stuff, but yeah. So it's like, even if this were to bounce this little lower, like even if you bounce this, I wouldn't be looking for anything more than this like 5 minute or the 15 minute trend, because then they could still hold the 5 minute, 15 minute lower high and then roll it down again, right? If we started to take those out, then yeah, you might argue that the bottom's getting sustained in something, but again, these are just the rules that I follow and the way that I view the market, so hopefully it helps. I really don't need any of these. I don't know why I drew so many of them. It's kind of stupid, to be honest. What time frame for analysis? I use all time frames, but if you're talking about that VIX comment, it's the 30 minute specifically. $12.49. Hey, let's go. Let's go. Comical. Let's get back into the community support help center. I just don't get it sometimes. Where is the share button on this? It's ridiculous. How is a brother supposed to? I guess we'll just go to, that should work. I know this is probably relatively boring watching this for the moment, but I got to do something here. Matt, very nice. I appreciate that, brother. Thanks for the comment. Yeah, I guess I've tried to do my best at being a good mentor and teacher and teaching good things, so that's beautiful. I'm very, very happy to hear that. And that's great stuff on your part. Really good stuff. Come on, shitcoin. Just do what you're supposed to do. Wee. Playing basketball. Wee. What else they got in here? Probably something good we could use, huh? So close. So close. Yes.
What else we got in here? Come on, there gotta be something good. Oh, we could use this, like a little hole-in-one. Did you get the hole-in-one? Hole-in-one. Whee!
Oh, snap, I forgot. I was supposed to be on this freaking chat. I was over here putting emojis on a goddamn stock chart. Yeah, so that's pretty much target hit there, guys, on that Bitcoin short. Cheers, thumbs up, kudos. Whee! So again, you can probably see like a little bit of a counter long in this area. Don't shoot the messenger, but again, I wouldn't be short bias into this level if you're kind of a micro Bitcoin trader. So if you're trading some micros here, this is probably where you want to be a little careful. Or even if you're trading full Bitcoin futures, or I don't know, maybe you're trading some leveraged option stuff on Bitcoin. I have no idea. But just in general, I mean, this is kind of that short target for now. And could it go lower? Sure. But again, markets don't move in straight lines. So the first thing to do is probably get a little bit of a bounce, something like that. Bing, bang, boom. Would be cool, though, if it actually hit the red line and went right into the hole. Come on. Go down into the flag's hole first. Do it. Sorry about that, guys. I was just had to send this message. No thumbs up. No, just not even a little, no thumbs up there. Just not even a little tickle me sideways for the old Field prediction there on Bitcoin, just predicting a $2 trillion market cap asset that's globally traded, Man. The game does not like me. But no, that was fun. That was good. That was great. Again, we missed the target there by about $320. So we did miss target there. It was $320. But then again, it's a $100,000 asset that we're looking at. So, when you miss things by $100 or so, it's not really a big deal. Probably still going to get it at some point, right? The thumbs fell off. Yeah, no one's got thumbs anymore. They're all gone. They don't exist. Nope. Nobody's got thumbs around here. We did miss it, though. We didn't get the full Tagger Magoo. Hey, there we go. Thanks, guys. Appreciate it. Just sit here and just sweat in my office, in front of these computers. All for the good of the public, really, at this point in my life. All for the good of the population. My mom always told me I was destined for something. I just didn't know I was going to be sitting in front of computer screens my entire life. But she said I was destined for something. Yeah, so little update. Bitcoin market down pretty much to target. We'll see what happens next, or when I feel comfortable calling something out next. Stock market just in a bear market. Really nothing to do there. We're just kind of sitting waiting for the eventual retrace, which it's not really true. I mean, there's always a little something to do, but yeah, like right now we're probably doing like a 5-minute short on the market, I would probably assume. Let's see. Not here, but maybe this guy. Yeah, a little 5-minute VWAP short on the market. So it's just the 5-minute chart kind of doing its thing for the moment. I haven't really mentioned a whole lot of the short-term stuff, just kind of been hanging out, focused on that Bitcoin move for the time being. Yeah. Let's check on XRP. Actually, because, we did tell, the world that it was coming into mega resistance, but I know there was this hype about RLUSD, and there was this, and there was that, and so, but yeah, I mean, so far, resistance is holding up on XRP. Does it go higher? Maybe, but again, wasn't a big resistance point here. So far, it's not looking the greatest, but again, what do you expect? The thing pumped up, went to the moon, run into resistance. So if you've been long, it's a great profit take. It's been a great profit take, into the 280s. We literally mentioned it the day it came into 280, like right here. Like, hey, it's in resistance. So, again, this is a great profit take up here. Does it go higher? I mean, maybe, sure. No one says it can't. But for the moment, this has become a great profit take for XRP. Not to mention the Bitcoin dominance is starting to kind of take back, and so that's kind of why they're struggling too. If you look at the Bitcoin dominance chart, BTC.D, this is kind of another little tidbit of information, but you're looking at the Bitcoin dominance chart over here. You can see that the Bitcoin dominance has been coming back, right? So right now we're going through a short-term pull on a lot of your altcoins, things like that. So what you're going to need to have happen here is you're going to need a lower high on the Bitcoin dominance, and then that could kind of help put some strength back into some of those alternative cryptocurrencies for the moment. So you basically need a lower high here, there's a good chance it can happen actually, and we actually could be right at the start point of that lower high if the weekly volume weighted average price is legit there, which we'll see. It's kind of a new test there for me. Matt, we don't have a free Discord, but the first link in the description of this stream should be a link that says like to our new website or something. You'd have to join the private group there. We don't even offer a free Discord anymore. We used to. We just stopped doing it. So, but yeah, if you did want to, not just sit on the YouTube stream with us and be in kind of the live group, it's first link in the description, and then that'll take you through some prompts and whatnot. But yeah, yeah. And if you do go there, then you're gonna go to the dashboard page, and it's kind of a goofy setup. You actually have to click the dashboard word/button to go to the dashboard page. It kind of pulls up as a drop-down menu, but the top of it's actually a button you'd have to push to get to kind of the stream and the connection of Discord. Some people get a little confused about that. Okay. Yeah, we're just not really a whole lot here to do. Like I said before, that's what we were kind of working on, was that Bitcoin roll into the downside. So again, like that plays kind of happened. Again, we got very close to target there. Whether it wants to go get it fully, it's kind of up to the market at that point. We've done most of what we expected we could do there. The last time I called this trade concept, it didn't work. But this time it did. We tried to do the same trade back here on this low. We try to get this. So I'm honestly following the same thing I did back here. So back here, this was daily support. And then I was thinking back there that we could take out this support and then go to that target right here. It's the same thing here. This is, daily support. Sorry. Well, I guess you could say it was, right? So that was daily support right here. And then the move down to, let's just put the line back, maybe like right there. The move to here, this is the same trade. I'm literally doing the same exact thing I was trying to do back there, just doing it here, and it's working. That's it. It's almost identically the same setup. I know it probably doesn't look like it, but it is. It's almost the exact. It is the exact same thing. The chart patterns just look a little different. The levels may be priced a little different, but those that were on the stream and then those that follow Twitter may remember this call. But I'm like, yeah, guys, we're kind of at like this support, and if we break down, we're gonna flush to here. If not, it gets picked back up again and does whatever, right? So it was the same thing we just did today. I'm like, hey guys, if we take this out, we're gonna flush down to there, right? Because that's just part of the game, part of the rules there. It's working this time around, and arguably because this is a little bit more bearish than this was, maybe, but. I mean, you can see it too, right? I mean, look at the roll. So think about the first bounce, so daily support bounce, and then look at this roll. Slam down. All right, so we come down, daily support bounce. Look at this roll. Slam down, take out previous low flush. Right? So it's just this time around, we just wanted to double bottom hold the support. Right? This time, nah. So goes to show that, right, sometimes things will work good, sometimes they maybe not, but just because it didn't work in the past doesn't mean it won't work in the future. Just because it didn't work here doesn't mean you should change your strategy here. Matt. Oh, yeah, thanks. Yeah, no problem. Yeah, so just first link in the description there. Really, that goes for anyone in this chat. But again, most of you guys are pretty well-seasoned traders and have gone through courses and things. You've kind of probably settled in. Yeah. Let's see. I'm going to do something else here. We'll set up some more stuff on Bitcoin just so we're kind of planned. Oh boy. Probably going to hop off here in just a tad bit, but we're going to go over some Bitcoin stuff first, and then I'm going to get ready to roll, because why not? We've already predicted one of the largest. Well, we've already done that. We've done the largest globally traded ETF in the world today, and arguably one of the largest globally traded assets, Bitcoin, today. But let's see what would be next on deck. So we gotta go there, and then it would be. I was gonna say I'm not super clear cut on this next one because I'm kind of getting conflicting levels. There's kind of enough levels all relatively in the same area for Bitcoin that it's kind of like any one of them could work, so it's just not clear cut. It's not like I have specifically one to go to. There's kind of just too many that could conflict, so it's really best not to give exacts on this next stuff, but more or less a zone. Yeah, if I try to get too exact, I'll probably be wrong on this next stuff. Not that guy. That one, yeah, I'll go with this. That's one. Yeah, this one's kind of a big zone, but and I know it's gonna sound kind of dumb even when we look at it too, but we would be looking at something like, wait, hold up, would it be, yeah, that guy is that one there. It's again, it's kind of stupid, but I have two more. These are some of the points that I find of interest on the next way down. So, you know, as the story goes, if the market keeps selling down, obviously prices are going to go down, but I would basically be looking at these next ones down here and here. I'd be looking here, and I'd be looking to here. And each one of those levels kind of become more activated once you take out the previous. So we've been kind of working on a move to obviously down to here. So as the story would go, each one of these are doors. And once you get below one of the doors, door number 1, door number 2 opens. Below door number 2, door number 3 opens, and so on and so forth. And obviously if you just zoom out, you know, it's really nothing other than just... you know, it'd really just be the market selling down back to kind of like previous levels where it bounced. So I would say for the average person, they would look at this and just be like, oh, so you just kind of think the market's going to go back down towards like these support levels, like pretty much, but I would pick these exact price points along the way. Those are exact where I'd be looking. But again, this isn't the most straightforward one because there's a lot of conflicting levels there. So I'm kind of picking the two that I think are the most relevant. Even though there's a lot more in there I could kind of choose from, it's just kind of one of those situations where it's a little dicey. It's not so straightforward on this roll. And then, yeah. We will, I think it's too soon to look at some daily stuff, even though I'm already thinking it in my mind, kind of where, if this is going to be kind of a dragged out mini top, so we'll say that we do something like this, and then maybe even put in a lower high. Or try to. We'll look at a lower high later. But right now, it's just we're kind of on the immediate sell side, knocking out liquidity on the downside. And eventually, when the market finds good enough demand, we'll bounce it. And then we'll be looking for a lower high retrace track down, probably on the daily. It's just too soon for that. So we're kind of in the micro down till we find a big enough support that can then bounce the chart and give the daily chart enough time to establish itself for a lower high bearish setup. So yeah, we're just kind of micro down right now till we find enough demand. And so those next targets down would arguably be some of those next sell levels to potential demand levels as well. And again, like I said, it's, once the market gives up one, then it opens a, holy cow, look at that chart. It looks terrible. The average person would come here and be like, this dude knows absolutely nothing. Look at all these random lines on his chart. And the funny thing is that's just all for the purpose of explaining and not even, So it's like, looks like the most ugly chart ever. It's kind of funny. So we'll clean up some of this stuff. And yeah, we'll get ready to call it a day there. I think we've done a pretty good job on this stream today. Obviously, if I sat here all day long, you'd see more cool stuff. But, we all got lives to live. And, I got kids on Rocket League to own. So I will let you guys, I'll leave you there for the day. Hey, Matt. Hey, guys, my setups really look like garbage and they tend to work out. That's good. That's good if your setups look like garbage and they work out. So, anyways, you guys have a great time. Appreciate you for tuning in. Like I said, we're going to rock and roll with streaming here for, foreseeable future. The objective is that one day the algorithm will kind of shift back in our favor, maybe. Some kind of pessimistic on that view, but maybe. So, we'll see. Anyways, I'll catch you guys back a little bit later, and cheers. Have a good one.